Good morning, traders. It is Friday, June 21st. It is summer solstice, longest day, sunlight day of the year, first day of summer. It's also the last day of the week, so it's going to be a pretty wild session, I would think. Obviously, we've got that drone getting shot down, and it sent a little fear through the market, and gold had a little bit of a pop. We'll cover that in just a second. Overall, let's just jump into the equities market, quickly go through where we are in the grand scheme of things. Based on short term, the 30-minute chart here on the left and the daily chart trend on the right. If we take a look at the chart, yesterday we had a huge gap open to the upside. We had a big gap window. Gaps tend to get filled, and we ended up seeing the market. It did open above this red hashtag here, which puts us into an overbought territory. And typically when we get up into resistance, a major resistance area, we are overbought. We have some type of a cycle high. We usually see the market come back and fill, and that's what happened. It faded down and then had a final flush. Didn't do 100% gap fill, but typically it'll go at least to fill wherever the highest part was in the previous session. And that's where it came down and tagged. It ended up having a strong bounce off there, but the gap did fill for short-term bias trade there. Now, if we take a look over at the market, the daily chart here, we're starting to get a little overbought. It's had a pretty nice run to the upside, and we got this kind of almost a V-shaped recovery, really depending on the time frame. When you zoom way out here, you can see it's very much so V-shape, especially over when you zoom back further in time. But when we stretch it out, you can see we are into this next level of resistance, which is this major significant high. And we've gone from where all of our cycles here are clustering near the top, and then the market rolled over to where they all clustered near the low. And now we're getting back up into this top zone where more or less cycles are starting to cluster. We're into resistance. We're going to have to see where the market does here. It could start to form some type of topping formation, start to show some weakness. Back over here, we saw a sharp drop, and then it ended up having a bounce, and then it started to break down with some big intraday volatility, and then it picked up speed and went into a downtrend. So we'll keep our eyes peeled for that. At this point, we're holding up above this 5-day moving average, which is a high momentum play. As we start to trade through there, that'll be the sign that things are starting to weaken. And then the question will be, will it break below this kind of rising channel with some type of crack to the downside, which is kind of what happened over here. You can start to draw some lows as it starts to break these rising trend lines, horizontal resistance or support levels. As it starts to break down, that's where you start to see the potential for the downside in the market. If it starts to break to the upside, then we're going to probably have some more significant blow off top and see it kind of pop. But I do feel as though it'll be somewhat short-lived, and we're going to get into some volatility soon. If we take a look over at, let's take a look over at gold. Gold continued to have a nice pop this morning. Take a look at the daily chart here. Intraday wise, it was trading all the way up to 14.15. Nice pop there on fear-based news. It's starting to come back a little bit. Silver's actually down 1%, so it's just going to show us that fear is moving into physical gold, not so much the speculative silver. Silver was down really sharp this morning, giving back all of yesterday's gains. It's had a little bit of a rebound back there, but overall, again, usually what goes straight up more or less around news usually comes straight back down. Gold's being kind of supported with some extra fear overseas, but overall, the market never travels straight up. It seems like everyone is in panic station that gold is going straight up into the moon and not looking back. That's usually a sign that the market's getting a little bit overdone, and it's going to have some type of pullback. Now, in the grand scheme of things, if we look at the big picture of gold, let's go to the monthly chart. Give us a real big view here. You can see where we are in this basing formation that we're poking up, pushing into these upper resistance areas. If we actually go back to let's go to the weekly chart here. And if we go back in time, you can see more or less when we get up into these upper levels, we've seen these levels been tagged before, each time followed by some really strong selling. We've had it pop back up. We're getting close to these areas. So I wouldn't be surprised if we see gold potentially pull back and channel in this area. I am bullish on gold long term, But again, we could start to see it trade in the upper end of this range, consolidate in here for a while, or potentially consolidate up here for a while before it potentially breaks out and takes a more significant run to the upside. But keep in mind, we're going to have this kind of support trend line here. The market could find support. It could still break down and make some type of lower low, or sorry, a higher low, depending on, it could come all the way down to one of these levels here in the longer term and still be within this major basing formation. Now, I know it looks like it wants to break out, but again, the market doesn't always seem to go that way, and the market always takes way longer than you ever anticipate for a pattern to form. So for all we know, this could take months for gold to really consolidate through this area and potentially start to break out later this year. But it is set up. It's got a lot of momentum here. We'll see if it can break through this resistance area and start to take off. If it can't break that area, we're going to be seeing it consolidate and pull back most likely in a fairly significant way. Take a look over at miners real quick. We closed out GDX J yesterday. It's popped all the way up into this resistance area. Very significant pivot area on the chart, really along this area right across here. You can see it's acted as a critical level here for lots of pop outs, consolidations, pops and drops in the market. And so this is a really significant area. That's why we pulled our money off. This could very easily pull straight back down, make some type of higher low down in this area, potentially still come all the way back down. If it does start to break out and consolidate, we'll be looking to get long again. But overall, we caught this move from the low to the high. We caught this last move as well from the low to the high, and I got a lot of flack for selling miners when we sold right up here during this week near the high, and of course it pulled all the way back. We got to trade it all over again. So you got to plan the trade. We've planned it. We've traded the plan. We're at resistance. We're getting out. We can always get back in later if it starts to take off without us. But this is the trade from the low to the high. It's still in more or less a downtrend in basing formation at this point. Take a look over at the dollar. This is the weekly chart again. Dollar looking pretty bearish here, looking like it wants to break and start to move down. Obviously, if the dollar breaks and slides here, we are going to see a pretty significant rally in metals. Everything is more or less hinging around what the dollar is going to do. You can see the last time we started to form a little bit of a topping formation here, we had this rising support trend line, and then we had this support level from this pivot low, kind of flirted with that level for a while, went in and through it a bit, and then gave way for a pretty big sell-off in the dollar. We're kind of at the short lower end of this line right here, these pivot lows. You could draw even tighter ones up here. It's starting to break down. We're going to have some pretty critical support along this area that if it starts to break this area, we could start to see it slide and pick up speed, which would trigger the big rally in metals. But the dollar has to break down, and for all we know, it works its way and continues to kind of grind higher. Eventually, it'll break this rising trend line and have a big crack and fall. But until that happens, we're not going to see gold and silver really take off at that point. Looking over at energies, natural gas up 1%. In the last couple of days, it's really had a big fall. This is the weekly chart. Still looks really bearish. We got potential. We talked about this about a week and a half ago about natural gas looking like it could go all the way down to 2. We were expecting a bounce, a longer pause and bounce before it rolled over and washed out at 2. Looks like it's headed on its way down to 2. Could be a great opportunity when it gets down to that level. Let's go to crude oil. Again, this is the weekly chart. You can see a big pop. It's popped through short-term resistance. It's already up to the next resistance. Huge move in oil yesterday. More or less, it started to form this W bottom formation. Let's go to the daily chart. We've got this W formation. More or less, it's had the initial impulse pop happen very quickly. Usually you can take the distance from the high down to the low. You can usually measure that to the breakout point. Roughly the same. It's also 58 we talked about as resistance. It's also this area of resistance on the chart where it was resistance, support, and then broke down. Now at this point we're at resistance. So more or less that move really just popped and happened in one more or less one session. Today it's trading up, pushing that level again, but overall a little too quick and just kind of broke and popped, and it made that impulse move. That was the quick move. Now we got to see what it's going to do. If it's going to flag out, build some type of pattern for it to continue to move back up to the 62 would be the next more or less target. Taking a look over at the IWM, this is the small cap sector. We're looking for it to get some traction, but again, as I talked about with the larger cap index, the SP 500, we're likely overbought and going to see some type of pullback. And we've seen this market run, had a little running consolidation, pop to the upside. This is somewhat of a bearish pattern, typically, especially when it comes right up into resistance. This is a key pivot area in the market where it's acted as a support and then resistance and then support and then resistance, and now it's back under it. So we gapped higher, we sold back down. We'll see how that goes underneath. I think we're gonna see equities potentially pull back a little bit, take a bit of a breather before we start to move higher. Now again, looking back at gold, let's just jump back at gold real quick, and let me throw a Fibonacci extension on here so you can get an idea of where gold target likely is. So if we were to take this low down here from where it started to rally, we go to this high right here, the first pullback and pause, and we carry that forward, it gives us an idea of where gold should start to stall out. And you can see we've had this move. We've rallied, we had the first pullback. Typically the first pullback can be bought, and then we came all the way up, and more or less this morning in pre-market we saw that 100% measured move get tagged. This is a huge resistance area between these two blue lines going way back in time, years. And we could start to see this consolidate up here. We could see it rotate and consolidate down in between these two lines. And we could even potentially see it consolidate, come all the way back down to test these lows. No one knows where it's going to go, but overall it is in a short-term uptrend bias, but it has hit its move, and we could start to see this consolidate, potentially pull back before taking another run higher. Anyways, that's it for now. Talk to you in a bit. Bye-bye.